To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're with us here on Market Guru, and joining us today is Prateek Agarwal. Great to have you with us on the show, Prateek. And on a day when markets have been in free fall mode, lot of jitters against the global backdrop, of course, whether it be rates, whether it be geopolitical tensions and the spiraling crude prices. I think that's really where the concern's at. Talk to us about what you made of the fall and how much reason there is to be worried.
Yeah, so the fall today was large and quite widespread. Apart from the two reasons that you spoke about, there is the third one as well. We will get the new margining rules by the end of the month, and that will require some adjustments. Apart from, yes, absorption of large IPOs which are around the corner. That said, these are things which keep happening in the marketplace, and any dips on this count usually proves to be a good entry point. Let's remember that any geopolitical, occurs in a if at all, one they are rare, and then if they occur, it is for a short period of time. After which things normalize, and any dip in the marketplace because of that usually proves to be a great entry point. What needs to be seen is that quarterly results are coming in quite strong. The earnings momentum stays good. The outlook for financial 23 hence stays unimpaired. And now, if you look at 10 years average valuations, after the fall today, we are very similar to those levels. So on valuations, where people were a lot more concerned at a point in time, I think we have got a pretty sharp correction already. So, this year is going to be a tough year. From the beginning, we were making a case that 23 over 22 could be a 17% earnings growth year, and versus that expect 10 12% on the index, building in 5% kind of valuation correction. I think this sharp market correction basically takes care of all of that. And going forward, versus the double digit we were talking of, maybe slightly more returns should be expected on an annualized basis once the issues we spoke about go behind us.
Given the concerns also of the Fed hiking rates as anticipated, as they've talked about, we've seen a pullout when it comes to fund flows from India now successively over the last couple of months. What's the situation looking like to you? Because in global markets as well, we're continuing to see that weakness, we're continuing to see that pressure, and clearly we're following those cues.
So it happened in the past. In 2013, they started to pull out liquidity. That was we experienced some amount of taper tantrums then. Versus that, this time around, we are much better prepared. Our forex reserves have improved considerably over last 3 years. Versus then, for 5 years, we were mostly flat. On interest rates, we are good. On relative to the world, our fiscal is good. Our governments have not overspent. We have not printed money the way they have in the West. So a lot of the issues are lying in the West, but like you said, if they catch a cold, we will also sneeze, and which is what is definitely happening. But here, my thought is that what happens in other parts will create volatility in the near term. However, the direction of the markets will be dictated by our own earnings momentum, our own policy direction, as has been in the past. So, if we go back to a 13 to a 18 kind of a period, in 14 we got very strong markets. We got our government change, market celebrated. 15 we had our banking issues, markets did not do well. RERA GST happened in a year, market celebrated. ILFS crisis happened, markets fell. So, all of them were our issues, not something which happened in the other part of the world. And like I said, versus then, we are much better prepared with strong forex reserves which are over our overall gross domestic debt with buoyant software imports, which are even at the current oil prices similar to the oil imports that we may make as a country, and growing very fast, so that in a year or two it should be exceeding the oil import bill. So lots to look forward to, and yes, of course, the buoyancy in terms of hires. So while the unorganized space is seeing pain very clearly, but the organized sector, IT in particular, is hiring very, very strongly. And all of those effects need to be remembered as we go forward. Earning momentum, to my mind, should stay as we go forward. Maybe commodities start to recede a bit as geopolitical sorts itself out, as the supply chain becomes more normalized, and that should then provide a leg up to our, let me say, branded businesses.
Okay. Prateek, we've got a massive IPO on its way, the much-awaited LIC issue. Lots of details are, now out post the filing, of course, and even the embedded value has increased at this point of time, perhaps by changing the way it's looking at sharing its profits with policyholders and shareholders. Tell us the kind of impact you see of this mega IPO on the market at a time like this, when we're seeing so many other reasons for concern.
Yeah. No, so at any given point in time, a large IPO does suck in liquidity from the secondary markets. People have to make space for it. It is a large IPO. It's an attractive IPO. They're growing well. They command a dominant market share. And as of now, what the sense is, it's being priced quite okay as well. So people will make space for it in their portfolios, which then means that they have to sell something that they are holding, and secondary market sees some amount of pressure. So that's the near term. However, what also happens is that such an IPO will bring in another crop of new investors into the market, and the momentum of new first-time investors into the market could see an acceleration. That, to my mind, is a structurally good thing to happen. We, as an economy, have a very small representation of retail in the market that could expand. If I go back into history, something like that happened when the Maruti IPO happened. And while yes, in the near term it caused some amount of ripple, but medium to long term, that was the point from which the market started to do well. The same could happen this time around. Keeping fingers crossed, such a large IPO, it should happen. It should happen successfully. It should list successfully, so that people who are coming into the market for the first time experience some positivity, and that could help the market in a big manner. It is not only LIC; it is also an NSE issue. It should be happening, and yes, till it happens, like I said before, it's one of the points which the markets have to digest. The markets following the earnings kind of thing that we always talk about would happen only after such large issuances have been digested.
And that's just it, isn't it? It's such a large issue. We've seen what's happened to Paytm, and that was the last mega issue we saw at the end of last year. We've had a spate of issues that are lined up also for 2022, as the primary market has been so hot. So considering this is likely to suck out quite a bit of liquidity, what does that even mean for the primary market going forward? Because would it be prudent to assume some of those issues will be perhaps pushed back, or people might be or remain in the wait and watch mode to see the kind of response to LIC first?
No, so all of this would happen, when markets crack a bit, or one part of the market, for example, tech-oriented companies crack a bit, it will have some impact on the issues lined up in that space. Maybe they wait for things to normalize. Nobody wants to test the markets when markets are still finding their feet in their space. But then, going by the vacuum created by them, maybe some other sector issuances may come in and fill the void. Point is, markets are buoyant even now. Matlab, let's not talk about last 1 week, 15 days kind of correction that we are seeing, and a violent one today. Positivity is still there. Retail is coming in. Good quality issuances would hence, I think, continue to come to the market and be absorbed. Now, at the end of the day, capital markets exist to allocate monies to newer businesses that come onto it rather than only changing hands for the businesses which are there. And the amount that we saw last year, inclusive of an LIC issue, maybe a tad more than what is usual, but X of LIC issue was something that the market should be able to digest. We ultimately did 20 odd percent kind of growth over the year before. So some amount of issuance is very clearly healthy. I really it's a great tap to take out any steam which is there in the market, and the fundamentals then manifest themselves in a much better manner. However, IPOs should be priced nicely, leaving something on the table. They get in new investors, they should make some money, feel good, and then become more entrenched into the market.
Do you think that it will be challenging for LIC to attract certain key anchor foreign investors? Prateek, just want to get your take on that, because it's not only is it a large IPO, it's one where, while it has a huge history, its financials have not been public very regularly or frequently. And of course, all of that is in the works now. But again, given timing, given the fact that it's perhaps a company where a lot of due diligence will be needed to be done even by anchor investors, foreign investors, do you see any challenges on that front?
No, I think this IPO was announced a year back. Okay, and it is amongst the larger IPOs, largest in India, one of the larger ones globally. So people would have followed this up quite well over the interim period with whatever data was available. I would expect to see a good participation in the IPO. I am actually very positive, and given its size, in no time it should be included in indices, both Indian and foreign, and that brings in itself a life of its own. So a lot of things which are going positive for this IPO. It is in a good sector. Something which even ESG oriented funds may want to look at. So there is hardly anything that you can say is not positive for LIC. It is dominant in its space, it continues its market dominance is coming at a valuation cheaper than or similar to let's say PSU valuations of this space. So why should somebody not look at it? So I would believe it will be a good resounding success, and the aftermath should be positive. It's a solid company, solid financials, something that we have all grown up with. Even now, people may opt to have themselves insured more by LIC, and the numbers show that versus others in this space. And hence they would be that much more confident to invest into it.
So in that
I
case,
would stay positive. I would not be negative on LIC, but yes, it does suck out liquidity from the secondary market while it is happening. After it has happened, the new investors that come in could provide a leg up to the secondary markets also.
That's good to hear, Prateek. Though I have to ask you then, in that case, do you think perhaps it's been priced too low? If it's it has been a much awaited issue.
Yeah, I see the large size is probably something which is playing on the mind, but look at it. I mean, of the life insurance companies, which is the one that Indians choose, if still most people choose an LIC, why should it be valued lower than the others in this space, and also lower than PSU name in this space? Except for the fact that you want to leave something on the table and the issue to have some amount of a pop for investors. So and over time, either the current listings start to trade substantially lower, or this name starts to trade higher. Both of the outcomes can be there. But given the fact that the current listings are themselves very liquid, have a long history, and they have more or less sustained their values. In fact, one name has gone up while the other may have come down a bit. I would believe that the new name LIC find its feet, and if not the pole position, at least command the second position in terms of valuations.
All right. Talking about some of the other pockets of the market, and actually today it was a broad-based sell-off, broad-based massive sell-off that we saw. Do you anticipate again, if we do continue to see profit booking or weakness persist, that it will be across the board? Are there perhaps segments of the market you'd advise booking profits in or staying away from currently?
Yeah, so our sense is that the commodity part of the market is on borrowed types.
Okay.
Had it not been for zero tolerance policy towards COVID in China, maybe things would have normalized quicker. One big reason for higher commodity prices is uh, supply chains getting disrupted. The quicker they normalize, the quicker prices would also normalize. And that would mean that you know one should be extremely careful to be in the commodity space. Even oil, which is getting leg up because of geopolitics, like we discussed earlier, that geopolitics typically sorts itself out in a month or two. So unless somebody is investor for a very short period of time, this again is a space that one should be away from rather than be into at this point in time. And the flip side is the users of commodity. Yes, they are today facing a lot of pressure of margins while they are increasing prices, yet the price increases are lagging behind input price pressures. I think as we go forward by, let's say, first quarter, if not first quarter, second quarter of next year, the opposite could be true, that they have had their price increases, commodity prices are coming down, and we see a leg up in the margins. Uh, so, for slightly long-term oriented investors, I would believe users of commodities with pricing power, branded spaces, could be a better place to be in the market just now versus the commodity space.
Okay. And since you're positive overall on the markets and on earnings, what would you suggest one should still get into on dips?
So the high quality space, the spaces which continue to grow pretty secularly over long periods of time, such as pharmaceuticals, IT,
Yeah.
FMCG, consumers in general, branded ones, are spaces that one should look at. New space that is coming up is healthcare. So I did speak about pharma names, but maybe hospitals is something which is coming up. Many companies which used to have return on capital employed in early teens are now crossing 20%. And as COVID recedes, and the more pricey therapies, surgeries start to occur, the numbers there could improve further. I think that's one space that one could get glued on to. But very, very clearly, to me, it is don't look at commodities, look at users of commodities with pricing power, the high quality space, which should handle this, volatility in the market much better. And as time goes by, deliver positive returns in line with the market or tad more. That's my sense.
What about the, mid caps, small caps? And I know some of the pockets you mentioned, Prateek, there are several opportunities when it comes to the broader market. So then would you say going forward, it's not necessarily about the sort of bigger stocks, and it's going to be more about quality stock picking, and that's really where an investor is going to find value and find consistent returns going forward?
Yeah. No, I would say nicely put. Today there is this big debate going on growth versus value, and in the West, at least value is gaining traction. In India also, one could find some semblance of it. Examples are thrown out. That stuff like NTPC, Coal India, maybe ITC doing better than others in the same space, etc. However, what happens in this country is growth. Many of our businesses grow profits strongly and over number of years, compounded, not 1 year. And hence, what is seen as growth today, if it does not perform in price, can become value very quickly. And over a period of, let's say, less than a year. And hence, value style in the country uh, has struggled, typically struggled, and I would believe growth is something which will again manifest itself, especially as valuations are correcting so sharply. So it's a matter of time. Let's take a quarter or so for the style to manifest itself again. In terms of caps, the other thing that you asked, well, if the positivity in the market continues to be maintained, and yes, it can get destroyed. It can get destroyed by continuous market fall. It can get destroyed by large issuances bombing, for example. But assuming it stays positive, and retail investors keep coming in that scenario, the breadth of the market, in terms of being able to transact, the liquidity across should be maintained, and the caps won't matter. As long as earnings are across the board. Okay, if earnings momentum starts to narrow down, and goes away from one part, be it large caps or mid cap, that part will suffer more versus the other. Today, the sense is that both the parts are delivering decent growth, and it could continue. So, and I do believe, the way retail investor is coming into the market, it should be seen as structural. People are getting educated, people are getting into job stream, they are savvy on their phones, so they should be coming in clearly, and they are coming in. And we should see it as a structural change that India is seeing. China saw this before us. We are seeing it now. In that case, it's not about caps anymore. It is about how a company performs.
Absolutely. Prateek, and just before we let you go, your view on the recovery, all disclaimers apart, are you tilting towards being confident that it's on track, or are you worried?
Economic recovery, I am very confident. Okay. As yet, we have seen only one section in the country pull the country back to pre-COVID levels. The other section is still struggling. Okay, it is growth, it is normalcy. Omicron is behind us. That will pull these guys out into the recovery mode. And mind you, they have their own pent-up demand, which will sustain growth into the future. On top of that, I do believe household capex, house buying activity is gaining momentum, and the PLI scheme of the government does provide some visibility on early capex, while the big ticket capex will happen over next 2+ years, not immediately. So I think there is this roadmap for growth. Things will have to go. A lot of things will have to get impacted for us to not be able to grow strongly.
All right, Prateek, we'll leave it there. Thank you so much for joining us. Great to have you with us, and thank you for your time.
Thank you.
If you like the video, do like, comment, share and subscribe.